Welcome to This Week in Money, the source for market opinions. Here is Phil Mackesy.
Gerald Celente is publisher of the Trends Journal, and he's founder-director of the Trends Research Institute. You can find out more at trendsresearch.com. Hey, Gerald, it's always good to hear from you.
Oh, thanks for having me on, Phil.
Wanted to wish you a happy belated Independence Day. You were in Kingston, New York. That is a place with a lot of revolutionary history. Tell us a little bit about your area and the part, Gerald, that it played in the War of Independence.
Well, actually, our offices are right off the most historic corner in the United States. It's the only place in the U.S. where in each corner there's a pre-Revolutionary War stone building. Of course, the British burnt them down in 1777, but most of them, the structures still existed, and they rebuilt them. And this was the first capital of New York State. And it was very instrumental in playing a very major part in the Revolutionary War. And my feeling is, and I just purchased, by the way, 3 of those 4 stone buildings within the last year. And I said to myself, if this is where the first American Revolution had its roots, why not start the second one? And for good reason. I mean, here we are. You're asking me about Independence Day? Independent from what? You're not independent from the government listening to you, watching every step you take, monitoring all your moves. You're not independent at all. This had nothing to do with Washington, who in his farewell address warned the American people not to become involved in foreign entanglements. It has nothing to do with the people who were the founding fathers, such as Madison and Jefferson and Franklin. In his own words, Madison warning us and Jefferson that the money changers were going to take over the country if we didn't stop them, and they would drive the people into poverty and use any means possible to rob us of our rights and rob us of our money. So, here we are in Independence Day, and I have to feel like the founding fathers would be turning in their graves.
Now, I was going to ask you what those early patriots coming back today, here in 2013 America, would make of the country that it's become. Have we really just replaced one kind of tyranny with another here?
Well, as I look at it, there hasn't been a revolution. When you look how closely tied the United States is with their mother England, and they're all doing the same dirty deals together, whether it's the Bank of England and the Federal Reserve, whether it's the war in Iraq with Blair and Bush, whether it's the U.S. and the U.K. with all of these spying activities on their so-called NATO allies. So I don't think a lot has changed. It's just a different king, but the nobility still rules.
Yeah,
and the nobility, the multinationals. This is Slavelandia. I mean, you look at the numbers that just came out with the job numbers. Oh, there are plenty of jobs, and oh boy, are they promoting it. Oh, this is wonderful. Oh, it's great news. Here's the fact, Phil. 3/5 of the jobs lost since the Great Recession began were middle-income paying jobs. 3/5 of those that have been created are low-income paying jobs. Am I making this up? Today, out of the 195,000 new private sector jobs alleged to have been created, 38% accounted for the category, I love it, leisure and hospitality. Isn't that a nice name?
Yeah.
Yeah, 52,000 new waitresses and bartenders, and 20,000 jobs almost in amusement, gambling, and recreation.
Yeah, it is. It is easy for us to look at these numbers and say, gee, this is good, or gee, this is bad. But as you point out, we're not looking at the kind of jobs that are being created, and they're usually pretty crappy.
They are. Again, the numbers don't lie, but the people reporting them do. Ambulatory health care services, 13,600 jobs. Oh, and you know where they lost jobs? They lost jobs in manufacturing. Yeah, that's right. The jobs that paid money. And according to the Bureau of Labor Statistics news release, they point out that the number of involuntary part-time workers, those are people that are unable to find full-time jobs but want them, it increased by 322,000 in June to 8.2 million people. So these people are all added into this scam of what they call job creation.
Gerald, I don't understand some of the thinking that goes along here. See if you can understand what they're talking about here. A strong jobs report is bad for markets because that means the economy is recovering. A lousy jobs report is good for stocks because, hey, that means the Fed can continue to juice the markets.
Yeah, isn't that something?
Yeah.
Who would have ever believed this? This is an experiment that has never been tried before in the history of the world, part two. I mean, yeah. Oh, yeah, let's just keep printing a lot of cheap money, dumping it into the system. And I got to know, we'll make up names like ongoing monetary transactions over there in Europe in the central bank, OMT. And then over here we have quantitative easing. And oh, yeah, that means buying up bonds, government bonds, and mortgage-backed securities to a tune of $85 billion a month. And you're getting away with this. You're rigging the bond markets, and they're rigging all the markets. Oh, remember, hey, Phil, for all those people that don't have attention deficit disorder, remember LIBOR?
Oh, yeah.
You remember that when they rigged the LIBOR rates, the interest rates, to the tune of, some $700 trillion? The whole game is rigged.
Gerald, talk to me about the second American Revolution. It is the Independence Day long weekend down in the States. We've just had a national holiday here in Canada, and it seems that the ideals that these guys fought and died for are farther and farther away than ever. Let's talk about a new beginning, what you call the second American Revolution. How do you see that happening, and what should we be looking for?
Well, the first things is to look at who are the people that are leading us? What makes these people so special? I mean, all they are politicians. It's show business for ugly people. And they're just putting on a show. And I think Frank Zappa called the politicians the entertainment division for the military-industrial complex. That's all it is. These are the same people you couldn't stand in high school and college that wanted to be class president and head of the student council. And they're telling us what to do. They're running and ruining our lives. So the first thing is to speak up, stand up, and have courage, and not to let these people rule your lives. Try to do everything you can to redirect it. And number two, you begin in your community. You change your community. It begins at home, and that begins by changing yourself. Are you living to the highest ideals that you can live to? Because when you are, then you don't take BS from anybody else because you're not giving it, which is the golden rule, do unto others. And then on the very micro level, which goes to the macro level, is buy local, anything that you can. I don't eat corporate food. I don't go to corporate restaurants. I try to stay out of corporate stores. Of course, I have to buy products that aren't made in the USA or locally, but I try to minimize those. And the other thing, here we are in the summertime, grow your own and get healthy as you can. And then the other one, what I keep saying is, stay home, don't vote. By voting for the corrupt political parties, you're just encouraging them. If enough people stayed home and didn't vote, then they would call this whole thing a sham election.
Yeah.
So if people say, if you don't vote, then you get what you deserve. No, if you vote, you get what you deserve. You're getting a mafia member. In the United States, you have a choice of the mafias. You have the Republicans or the Democrats. So those are simple things to take. But, Phil, the revolution is going on worldwide. There's a revolution in Tunisia. As we speak, there's a revolution in Egypt. There's a revolution going on in Spain. The Portuguese government. Yeah, you remember those slimers that put all that austerity measures on their people? And they took the money from the people, robbed it from them, and gave it to the banks, and it was going to repair the economy. Now that government's ready to topple. There's revolutions over there. There's a revolution building up in Ireland. There's a revolution going on in Greece and Bahrain and Yemen and Syria and in Libya. There's revolutions in Mali and through countries throughout Africa. The revolutions have begun all around the world. Oh, I forgot Brazil and Turkey.
Oh, yeah.
Millions of people taking to the streets in protest. The governments are breaking down. The systems are failing. You know my expression. When people lose everything and have nothing else to lose, they lose it.
Yeah.
And they're losing it. And they're going to be losing it here in the good old USA and Canada and everywhere else. As the economies continue to unravel, I've called America a new name. Slavelandia. And when you look at these jobs that are being created, the slaves are working. And it's better than a plantation. You don't have to house them. You don't have to feed them. They just barely have enough money for housing and to make ends meet. So what I'm saying is the game is running out. We began this by talking about the Federal Reserve and the tapering of their quantitative easing and their stimulus.
Mm-hmm.
What's going to happen when interest rates go up? This was an interest rate recovery. The only reason there's been a housing rebound is because of the low interest rates. The only reason the stock market is gaining any momentum is because of all the money being dumped into the financial institutions to prop up the markets. When interest rates go up, the economies go down. And let's not forget, how are the governments going to pay off their debt with higher interest rates? So not only do the people get screwed, you get screwed twice because you're going to have to pay more for the government to service their debt and for you to service yours.
Gerald Celente from Trends Research Institute is our guest here on This Week in Money. You can catch him at trendsresearch.com. And let's take a look at some headlines from Europe here. One of my favorites, Carney and Draghi declare monetary independence from rising U.S. rates. The Bank of England and the European Central Bank keeping their rates at rock bottom, 0.5%. And, of course, they're going to do that as long as they can get away with it.
Let's just take that first word, independence. Where is this guy Draghi from? Wasn't he the former vice chairman of the European division of the Goldman Sachs gang?
And Mr. Carney also worked for Goldman Sachs.
Son of a gun. Yeah, how's that for independence?
Yeah,
you got to be a jerk to believe that one. Independence. It's a takeover. It's a takeover. There's two mafias. The military-industrial complex and the money mafia, the money changers industrial complex. And they're in control. What are they doing by spouting out this stuff? Oh, yeah, we're going to keep money cheap. That's in response to the Federal Reserve move that began on May 22nd when they said that they were going to have to tighten up money. And they began to tighten it up with the fear of tightening it up, not even tightening it up, and the markets went into cardiac arrest. So now what they're saying is, don't worry, we're going to keep juicing the Ponzi scheme. No need to pull out now. We still got a couple of more months to play it out, or several more. How many more, I don't know. But as long as they keep pulling this game off, the Ponzi scheme keeps going.
Love this Goldman Sachs connection here, Gerald. London stocks going up today. Investors basking in the afterglow of the Bank of England news. And our good buddies at Goldman Sachs say that's great. They're targeting over 7,000 for the London Stock Exchange.
Yeah, what the market go up like 3% or something. Yeah. On what? On the good news that money's going to be cheap and you just lost your purchasing power of your pound sterling. Great. It's going to cost you people out there more money to buy everything because you don't make a damn thing.
Couple of other great news headlines from Europe talking about central banks. Greece's finance minister saying this week he's optimistic the talks with the Troika will be wrapped up in time for next week's meeting of the Eurozone finance ministers.
Again, these are sociopaths. That's all they are. They're frontmen. They're wise guys to the money changers. As I said, there are two mafias. The politicians are the wise guys to the mafias. And the police and the military, they're the soldiers, the enforcers for the crime bosses. This guy's nothing more than a little flunky shooting his mouth off like so many of them have before. Like the guy over there, or Rajoy over in Spain, Cleo over in Portugal, Hollande, Cameron, all of them. All they are nothing more than mouthpieces.
Yeah.
How could anybody believe this little clown in Greeks? All they've done is sell out the country. Privatization, yeah. That's another word for taking valuable public assets and selling them to your buddies at a bargain basement price and getting a cut for selling them, for doing the deal. Who could believe this guy? Oh, yeah. Happy days are here again. What are they looking at? Over 30% unemployment in Greece and 60% youth unemployment.
You mentioned Spain earlier. We've got news from Spain. Spain's banks do not need further European aid. That's according to the European Commission and the European Central Bank. So of course, that they need it desperately.
Of course.
Yeah.
Or the other thing is maybe they came out with a new plan to steal more money from the people that don't have any left.
Yeah, that's a theory, I guess.
Yeah, I mean that's how the whole austerity measure thing began. Did you see the tapes that were released from the money junkies and the white shoe boys in Anglo-Irish?
I did not see that, but fill us in.
Oh God, you have to look at that. How they were laughing and how they were playing the Irish government. First they were going to ask for $7 billion, knowing that it would be a lot more. Oh, and you should hear the language. Oh, you Irishmen would be proud of how you got shafted by the bank. And what was this for? Oh, European and other banks made bad bets, and the people have to pay off the bad bets that the banks made. Oh, no, everybody should go look up Anglo-Irish and put in the word tapes and read the atrocities that were being committed. It's live and in person for anybody that wants to take the time to hear it.
Gerald Celente from Trends Research Institute with us here on This Week in Money. Here's a name you don't normally hear when you're talking about bailouts. The International Monetary Fund and Pakistan agreeing to a $5 billion rescue package for Pakistan.
How'd they pull that one off?
I have no idea.
Yeah. Oh, yeah, Pakistan's going to find peace and prosperity. It's just around the corner.
Perfect.
And listen, Phil, there's a bridge over here in Brooklyn that I could sell you. I mean, how could they pull this stuff off? Pakistan is in the middle of a civil war. It's going to be erupting even more as it winds down in Afghanistan and bloodshed starts pulling over more and more and spilling over into Afghanistan. The new president there, with the new president just got elected, the country is already in turmoil, and they got $5 billion? I mean, you know who's going to pay for it. We the people, one way or another, because we always end up paying.
Gerald Celente with us on This Week in Money, and let's turn to gold, which is kind of reflecting what's going on lately, falling 3% today after those job numbers came out. Is this a real number, or is this all just kind of stagecraft here?
Well, I began buying gold in 1978. I also bought it at the highest point in the trading day on January 20th, 1980, when it crashed. I bought it at $8.75 an ounce and watched it, tank. It's a very different emotion then and now. Back then, Phil, it was only the United States, people in Japan, a few people in Europe playing the markets, very thinly traded. Now it's a different world. There was no Russia back then. It was the Soviet Union. Everything east of Berlin was locked behind the Iron Curtain. There was no China. We didn't know anything about China. People knew about China was Mao, and I think he was dead by then. And then, of course, India. India was a place where the gurus went, But they weren't doing business. What I'm saying, this is a global economy. And when you're looking at physical demand for precious metals, the premium keeps going up on it, and demand has not dried up. So there are two markets. There's the paper markets and the real markets. Yes, gold could continue to stay down for who knows how long, maybe a year, maybe 2 years. It could be, the dollar is looking stronger because all the other currencies are weaker, not because the U.S. is stronger. Again, when you look at the balance of trade, hey, how about talking about that? They don't talk about that today, did they? They didn't talk about the balance of trade deficit in the U.S., how it keeps growing. But no, we'll talk about the job numbers that are creating crappy jobs.
Yeah.
So what I'm saying is I'm in gold for the long term. I don't give financial advice. That's just me speaking. And I believe that there's going to be more global turmoil. There's going to be more of a financial crisis in Europe. And the financial crisis has not ended in the United States. The May 20th speech by Ben Bernanke on tapering off on the economy was putting up a trial balloon to see what would happen. They cannot taper off. If they do, the economy goes into free fall. So I'm into gold for the long term.
It seems that Bernanke is floating a lot of trial balloons.
Oh, Bernanke's a trial balloon. Go back and look at the Fed minutes. They come out every 5 years. Now that's something. You want to talk about democracy in the USSA? Yeah. Why can't we see them when they just came out? No, we got to wait 5 years so everybody forgets what they said. Go back to the Fed minutes 5 years ago when the panic of '08 began. Every one of them got it wrong. Every one of them called it wrong. There was not going to be any mortgage crisis. There wasn't going to be a recession. Everything is a trial balloon because that's all it is. It's a fool's paradise.
Now, as you mentioned, a lot of trial balloons, but nothing really substantive. So in the absence of any definitive Fed policy, what the heck is going on with gold? Why is gold reacting the way it is?
They're dumping gold on their paper, shorting it. And it's very easy to manipulate the markets on the paper end. And again, it looks inflation is not going up. The debasement of the currencies are not happening in the United States as rapidly as they are with the rupee and the real and other currencies, because right now the U.S. is looked upon as the only solid currency because the other ones are so weak. So again, it's a temporary, but it's a debasement of all the currencies. And again, and you've known me for a number of years, I've said this all along, I wasn't in the camp of hyperinflation. I was always saying that they're going to debase the currencies, so it's going to cost you more to buy the product, which is a different type of inflation than a supply and demand inflation. And so, for example, if you live in Zimbabwe and you need to buy a pound of coffee, the price of coffee hasn't gone up, the value of the dollar has gone down. And that's what we're going to see. But in the United States, it's on stall, because the other currencies are all weakening, and it makes it look like the United States currency is strong, but it's not. It's only strong in comparison to the other weak ones. So if you have you have a cancer patient that's ready to die, and one that has 7 months more to live, that's what you're looking at.
Gerald Celente with us on This Week in Money. We've been watching the gold miners just keep going down as the price of gold keeps going down. They're calling for a bottom of around 1,100. Nobody knows where the bottom is with a lot of these miners. And that, of course, up here in Canada. That's big news for us.
Well, it should be. And again, what they're saying, 1,100, 1,200 is the number that I keep hearing, is how much it costs to extract out of the ground. So if it costs that, I can't see it going lower than that. Could it go lower? Of course it could, but rationally it doesn't make any sense to. But again, I look at this as, nothing goes straight up or straight down. But let's not forget, since the gold bull run began, gold has gained, 400%? And what has it lost? 23, 25%?
Yeah, I think about that, yeah.
Oh, in the stock market? Now it's over 15,000 in the U.S., the Dow. What was the high? 14,000 in 2007. Accounting for inflation, the stock market should be 15,734. So big deal. It's not even back where it was back then. And look at the NASDAQ. It was 5,000. Back in 2000 when it crashed, and that was the hot market of the day. You remember? It was all those wonderful
.com companies.
.coms.
Yeah.
Now what is it? 34.79. So I mean, yeah. So to me, gold is still golden.
Gerald Celente is publisher of the Trends Journal, and he's founder director of the Trends Research Institute. Summer edition of Trends Journal is out soon. Put your money where your mind is and subscribe. Gerald, tell us how we can get involved and subscribe to your newsletter.
Trendsjournal.com, Phil. Trendsjournal.com, and we have a discount request page there for everyone that's having a difficult time. So it's not no personal information. Just tell us what we can do to help you, and we'll make sure that you get the Trends Journal so you could read history before it happens.
If you want to follow Gerald Celente on Twitter, that's easy. Just type in @Gerald Celente and the Gerald Celente channel over on YouTube. Always worth watching. And Gerald, I hope you have a great weekend. Thank you for talking to us today.
Hey, thanks for having me back, Phil.
This Week in Money is archived online at talkdigitalnetwork.com.
Eric Coffin is editor and publisher of the Hard Rock Analyst newsletter. Visit Eric at hraadvisory.com. Eric, before we connect the dots between today's job numbers, the Fed, and the price of gold, tell me what you do and what I get with a subscription to your newsletter.
Well, as you know, I think the subscriptions are changing slightly as of this month. I'm taking it from 3 levels to 2. So if you get a journal subscription, you will be getting 2 newsletters every month. What used to be the dispatch is sort of still going to be around, but I'm just getting rid of that level. And if you want to go for the high end, which is sort of more the trading service, that's special delivery, which gets you those 2 issues a month, and then alerts whenever there's something worth putting out an alert about. There's 20 or 30 of those a year. Nicola, that does our marketing, she is running a special right now where you can get the dispatch for $10 for 3 months. It's not on a page that you'll see on my website, so I'm going to ask if HowStreet.com can throw a link up for me on your website. Because if you go to mine, you won't see it. It's a hidden link.
Eric, you also have some changes coming to the HRA website this month. Tell us what's going on there.
This is something that's been coming for a long time. The back end of it's needed to be rewritten for quite a while, just to basically upgrade all the database software and stuff. And along with that, we're just doing a front end rewrite. I mean, some of it's cosmetic, but there'll be some new features that'll be hidden at first, but we plan to add a few new things going forward. One of the changes that subscribers will notice is that instead of getting attachments, you'll be getting a link that takes you directly to the file on the website when I put up new publications. Because a lot of publications have found they've been having problems with attachments because spam programs don't like them. So.
Eric Coffin from HRAadvisory.com, our guest here on This Week in Money, and the U.S. non-farm payroll report is out, Eric. The reason we're watching this one closely, if the Fed likes the way jobs are shaping up, it might start scaling back stimulus. U.S. economy adding nearly 200,000 jobs in June, way over the consensus. And you said a while ago, a number higher than the consensus could whack dollar gold prices again. That's what's happened. We'll talk about more of that in a minute. But first, will the Fed start easing up on the gas now? Does Bernanke knows where he's going? And should he stop and ask for directions?
I think that he will. I'm not sure how fast it's going to happen. I mean, he's changed. He's sort of moved the goalposts a couple of times. He was originally saying 6.5% unemployment was his target. Now he's saying 7%. But even if you're using 7%, getting to 7% from here, the current rate 7.6 with 200,000 jobs a month is actually going to take quite a while. I don't know if he's actually willing to wait until it's literally 7%, because I could see that taking a year, because essentially as long as you're generating that many jobs a month, you're going to have more of these discouraged job seekers coming back on the market, and there's a lot of them in the States. So it could be a while to get down to 7%. And I think Bernanke's probably a little bit concerned. He doesn't talk about it much, but if you look at the inflation rate in the U.S., if you look at it's called the personal consumption deflator, which is what the Fed uses as a measure, it's down to its lowest level since they started generating that index like 40 years ago. And I would say if anything worries Bernanke, it's deflation, because he's a depression scholar, and he knows better than anybody that deflation's way harder to kill than inflation is. So if that keeps easing down, he might be a little nervous about cutting the bond buying. He might want to keep expanding the money supply.
Eric, can you ever remember a time in your experience where markets and metals depended so much on what the Fed was thinking about doing or not doing?
No, I mean it's crazy, really. I mean, it's a little bit nerve-wracking for everybody that the markets are just so fixated on this. Because I mean, if you look at the big markets, I mean, the truth of the matter is, if he's cutting stimulus, it's because things are looking better, and you're probably seeing decent profit growth. There's no reason it should be throwing the indexes around the way it does, and really the gold is the same way. I mean, a lot of the real demand that underpins the physical gold market, well, it's got nothing to do with the States to begin with. Almost all of it's offshore, so it's quite amazing how much it gets tied to that one set of decisions.
Okay, so let's look at what actually happened to gold this week. It's dropping to nearly 1,200, closing in on a 3-year low. Obviously, as you said, gold is going to be affected by whatever Bernanke does. So what's going on with gold now?
Well, unfortunately, it had the reaction that I was afraid that it would. It got nailed for another $40 this morning when the jobs number came out. I mean, it went down as low as 1180 the end of last week and bounced back up, and it's sitting at about 1230 something now. I mean, I think a lot of the guys that were fairly bearish about the gold market were picking 11 to 1200, and actually the area in around 1160 to 1180 is a bottom. So I mean, and those are chart guys. I'm not a technical analyst, but the truth is most people that trade this stuff are chart guys, so their beliefs tend to become self-fulfilling prophecies. So I think there's still a potential for it to see as low as 1100. It may see another down leg. What I'm going to be watching in the next week or two is how do the miners react. If we start seeing the gold indexes, like the Huey and the TSX gold index, start outperforming the metal itself, that's probably your best indicator that we're getting to a real bottom, because the stocks tend to move before the gold price does. I don't know how that works, but it just works that way all the time.
Obviously, money flows have a lot to do with what's going on with gold. Here's an amazing stat so far this year. $28 billion moving out of gold ETFs this year.
Yeah, I mean, they were sort of the flavor of the month for 3 or 4 years. And in a sense, I think in order to get to a balanced market where explorers can raise money and people aren't out now panicking every day, the simple truth is I think we've got to shake loose probably, I don't know what the number is, but let's say for the sake of argument, a couple hundred more tons anyway out of the ETFs, because the truth of the matter is those are the weak hands. So in order for you to get a real base, you've got to shake those guys out. I mean, they've got to sell. They've got to be gone.
Eric Coffin from HRAadvisory.com, our guest here on This Week in Money. One of the other big things affecting gold that we've been reading about, a lower physical demand, mostly from India and also from China. That's also keeping the price of gold down.
Yeah, normally there is sort of an annual cycle, and in India certainly it's based on festivals mainly, but there is an annual cycle in terms of physical demand, and the low point is generally in July. So, I mean, that's one of the reasons I'm hoping we're going to see a real bottom get put in the next 2 or 3 weeks. Of course, the Indian government's also been trying to dissuade its citizens from buying gold. They've raised the tariffs on gold imports a couple of times, and they strong-armed the Jewelry Association in India, which sells not only jewelry, but it sells coins and bars. They kind of strong-armed them to stop selling coins and bars for a while. They don't say how long. And the reason they're doing this is because India's got a big balance of payments problem, and they do import a lot of gold. But as I think you know, because you read my stuff, I haven't got a lot of sympathy for the Indian government. The reason they have a balance of payments issue is that they're pretty incompetent, and they've always refused to really open their economy up. Their economy internally is just a series of corrupt cartels, and really they need to get their shit together. That's the problem.
So why are they picking on gold?
They're picking on gold because it's an easy thing to pick on. It's a big import into India. Indians are the biggest physical buyers of gold in the world. But the reason why they are, it's not, they buy jewelry, but when Indians buy jewelry, when Chinese buy jewelry, they're not buying 14 karat. They're basically buying pure gold jewelry. For them, it's a form of saving. And part of the reason that they do that is because most Indians do not have access to financial services. They don't have access to banks. And the banking sector is as messed up as most of the other sectors are in the Indian economy. I mean, they're not doing it. It's not a romantic love affair with gold. It's a very practical one. It's a very logical way for them to save.
Eric, I know we don't normally get much of a rally for gold in the summer. What do you see going forward for gold? Is it going to defy our predictions this summer?
Well, I'm hoping we see a bottom during July. I mean, in terms of certainly the physical demand, that's usually where you see the bottom every year, and the strongest buying period is actually in the fall. And basically the market has to price in the fact that Bernanke is going to stop the bond buying at some point. That's really what we need to see, is the market pricing that in. It's obviously been doing that for a couple of months now. I'm hoping that people finish pricing that in over the next month or so, and then we start seeing some lift coming out of July and going into the fall where you see the strongest physical buying.
Eric, we know what all this talk is doing to the bullion price. What's it doing to the miners themselves? What's going on there?
Oh, they're getting killed. It's not pretty, as you know. I mean, the Venture saw another new low recently, and the TSX Gold Index saw another new low recently. It's been very rough on both the juniors and the seniors, and it's an almost impossible financing environment right now. The only good thing that I've seen on the producer side, and I'm using good in quotations here, is I've seen, if you look at the way Pascua Lama got pushed back a couple of years by Barrick, the way unfortunately Fruta del Norte was walked away on by Kinross because they just couldn't make a deal with the government. So I think you're going to see a lot more of that in the next little while. I'm personally not concerned about this big oversupply that some of the guys that are bearish on gold and don't know the mining sector are talking about. I think you're going to see a lot of projects drop out of the pipeline in the next couple of months.
The politics of gold mining and exploration is something we don't often get a chance to talk about. Most of it around the South America region. Politics there, pretty hard to figure out at the best of times.
Yeah, it's, a lot of unfortunately, a lot of the best exploration regions in South America are very difficult to deal with. I mean, Argentina right now, they're not really doing anything to explorers, but because they have their own currency issues and they've made it so difficult to export profits, essentially. I've been told by guys at a couple of majors that as much as they love Argentina geologically, they wouldn't touch a project there with a barge for right now until there's a change of government, because, again, even if you build the mine, you can't get the profits out. Peru is still a pro-mining country, but it's very selective. You need local knowledge, and you need to be in the right areas. The areas that have been mining areas for centuries are generally okay, but a lot of other areas are running into real problems with the locals. Ecuador is just a mess, basically. I mean, most of South America, you do have a very high level of NGO activity, and that can turn around and bite you. Even in an area where you seem to be okay, you find out 2 months later there's people standing outside your gate. And most governments in South America are populist. They do listen to their population. So if the locals don't want you there, you got a big problem.
Eric, what about Canada? We know it's a reasonably politically stable country. What's the state of gold mining exploration here in Canada?
It's done, relative to other areas, it's done better, and I think that's going to continue, because I think a lot of companies are sort of getting driven out of other areas because of political problems there, and most of the country is cheaper to work than it is to, for instance, fly to Mongolia or someplace. There are issues in different areas. I mean, Quebec is in the process of rewriting its Mining Act, which is going to make things a bit more complex. And you do have issues in a lot of areas with First Nations. I mean, Northern Ontario is a big problem right now. There's negotiations going on, and I think there's a lot of areas like Northern Ontario, until those negotiations get cleared up, they're going to be very hard to deal with or raise money on, because there's just too much uncertainty. But most of the country's in pretty good shape. And it's, like anywhere, you've got to deal with the locals. If you go into work with an area, you've got to sit down with a local band and make sure everybody's on the same page and they're okay with what you're doing. And again, if it's an area that has some specific significance to them, I mean, why beat your head against the wall, frankly? It's just not worth it.
Eric, talk to me about the investment opportunity here. Is there a reasonable entry point coming up for people who are thinking about getting involved in the gold mining sector? Yeah,
people that are either brave or stupid like me have been buying recently. The one thing I've been following a lot lately, and it's a pretty short list of companies. I've actually been looking at discovery stories, and then I know that probably seems counterintuitive to people, but there's a reason why I've done that, because to me this market is feeling very much like an 80s or a 90s market where, changes in the commodity price aren't likely to be large enough and positive enough to have a big impact on the share prices. So what you fall back on, if we're going to see the juniors turn around, is basically discoveries. It's like somebody pulling a rabbit out of a hat and reminding people that's why they buy these stocks. So I've been following 3 or 4 companies, and I might add a couple more that have good finances, because raising money is just about impossible right now. Very strong technical management and targets that, to me, look like if they hit, it's got something with scale potential to really get the market excited.
Hard to determine from all the short-term noise what the long-term view is. Tell us again why we ought to own gold for the long haul.
I just think, gold is a store of value, and it's a currency. Notwithstanding the fact, I think the U.S. dollar is probably going to get a bit stronger in the next little while, because I think you're going to see bond yields and interest rates rise there. Most governments around right now are in hawk to a very large extent, and the States isn't the worst of them by any means. I mean, most of Europe still has some issues. They're by no means out of the woods. And really, if you're a country like the U.S., where you've got the world's reserve currency and people are willing to lend you money for 10 years at 2.5%, and don't seem to be terribly bothered by the fact that you're devaluing your currency at the same time, I mean, who the hell wouldn't take that deal? I mean, if I was the U.S. government, I'd probably be spending the way they were too. It totally makes sense to me. But we all know what the end game for that is. The end game is more depreciation in those currencies and more value for gold. Plus, gold in a way is. Everybody looks at, and I certainly do. Everybody looks at the way the U.S. dollar has traded the last 10 years. But the other part of the equation with gold is that you do have countries that have traditionally had a lot of gold buying because, one, it's a form of saving, but 2, it's a form of insurance. I mean, these are countries that have had tumultuous histories, and the 2 obvious ones are obviously China and India. And there are large swaths of the world where people buy gold, just almost without question. It's part of their savings routine. It's part of their insurance policy. And the economies that have those people that are drawn to gold have been the high growth economies in the last 10 years. And I think that's part of the reason the gold price has gone up as much as it has. It's not just about currency. It's about people in emerging markets basically buying the same amount of gold, say, as part of their income, but because their incomes are rising quickly, their gold purchases have risen quickly. And although China has taken a breather and India has taken a breather, I don't see any reason to think that march forward is going to end. I mean, I think after a bit of a correction, those economies start growing again, and I think their gold purchases grow along with them. And I don't think the gold supply is going to expand exponentially. It's very difficult to find a good gold deposit. A lot of them have political issues. A lot of them have infrastructure issues. I've got all kinds of people sending me these lists of 150 gold deposits and saying, "Oh God, look at how much supply there is." But I look at that list and I can see about 120 of them that I wouldn't touch with a barge pole for one reason or another. It's not very easy to grow gold demand, gold supply. It's much harder than people think.
Eric Coffin from the Hard Rock Analyst Newsletter. He's online at hraadvisory.com. Hey, Eric, thanks for this and have a great summer.
Thank you.
Thanks to our guests, Gerald Celente and Eric Coffin. And thank you for listening. I'm Phil Mackesy. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.